Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, July the 20th, and I'm going to take just a brief second as markets continued their march higher last week, continuing the positive momentum in the equity markets. The S&P 500 was up 2.42% on the week. The mid-cap index was up even more at 2.72 on the week, and the small caps as measured by the S&P 600 were the winners for the week, up 2.9%. And what we're continuing to see in the equity markets is we're continuing to see that broadening out of the equity markets, not the narrow leadership that we saw in May, from March to May, with the Magnificent Seven. And so what's really causing that? Why are we moving higher? Well, last week we got some very good news on the inflation front. Headline inflation, as we talked about, is at 3%. Core is below 4.8%, or below 5% at 4.8%. And then Friday, we got JP Morgan's earnings, and we've gotten some of the big banks so far this week. And the encouraging sign there is that the earnings are very good. And so one of the things that we've been talking about, that we have been discussing, is the calls for a recession that haven't happened and that we don't foresee happening this year. But the other thing we haven't talked about, and if you hear a lot of people saying, well, can the market really go higher from here? This is all multiple expansion. This is all it is. Well, going into this year, a lot of pundits and analysts on Wall Street were expecting what's called an earnings recession, where the earnings at the companies in the S&P 500 were going to be negative year over year, and then sequentially quarter over quarter, where the S&P 500 was only potentially going to earn $190 this year as an index, where it looks like it's going to be closer to 220, if not higher. So all of these negative things that were priced into the market or was weighing the market down, these questions are being answered, and earnings are coming in. Of course, there's always going to be earnings surprises when you turn on. If you look today, it's a great day in the equity markets. If you're a Dow investor, if you're in the NASDAQ, it's not so great because Netflix reported a revenue miss and an earnings beat last night, and the stock's down 8%. But remember, it's up almost 70% year to date, still with an 8% pullback. So understand, a lot of this stuff is priced into a lot of these Magnificent Seven names, and what you potentially have the opportunity to see as they report earnings is this is an opportunity for investors to take profits from these names that have risen so dramatically, so quickly this year, and diversify that out. The other thing you're starting to see is investors coming back into the market, out of money funds, and investor sentiment is starting to turn as fears of recession and earnings recession wane. So these are all encouraging signs for the equity markets and our continued march higher off of the October lows. As you recall, at River Place, we called the new bull market back in November, thought this is where we're heading, and thankfully that's where we are. So if you're invested, please continue to stay invested. If you have questions about how to get invested as the market continues to march higher, I know that can be a challenging thing to navigate. Feel free to give us a call. We'd love to talk to you about how to get in and get back into the equity markets. So if you have questions about how to do that or ways we can help you, feel free to give us a call. You can reach us at 904-346-3460, or as always, check us out online at www.riverplacecapital.com. I hope everyone has a wonderful rest of your week. Thanks so much for watching.